A Magic Formula, we've talked a little bit about it on the stream before and also outside the stream, of course. It was the brainchild, I suppose, of Joel Greenblatt, a very famous value investor who has had quite the track record in his own right. But he discovered this sort of anomaly with certain value stocks in that if you looked at two very specific factors, return on invested capital and earnings yield, so essentially quality and cheapness, if you took those two together and you ranked all stocks based on those two rankings and then just added whichever the highest rankings were for those particular stocks, if you just added them together and ranked those stocks accordingly, the highest ranked stocks, if you had a pool of those, would outperform the market by quite a bit. That's the study he did in the little book that beats the market. And it's a very simple approach to it. And there is an updated screen that goes out all the time. I think it's updated daily. That's magicformulainvesting.com. You can open up a free account and take a look at it. It's definitely a great source for investment ideas, if nothing else. And I think that'll be something we probably all touch on. All these strategies can be great ways to find ideas, whether you follow them as a doctrine or not. That's actually how I first learned about the Magic Formula strategy and being something viable. I think Brad did a video a long time ago about how he follows it. And I had heard about the strategy before, but I never really looked into it. But Turtle Beach came up on it. They're a gaming headphone and gaming accessory company, came up on it. I did some more digging into it and it looked really attractive given what I was going for. And I added it to my portfolio without having followed the Magic Formula on my own. And so that was like, okay, maybe there's something to this. It found a company that I liked. I wonder what the rest of the list looks like. And then I actually read the book after having been more thoroughly introduced to it. And I decided to start my own little experimental portfolio with it that I'm updating monthly. So that's a long-winded way of explaining the Magic Formula portfolio. Have you guys considered using it at all? Do you guys follow the screener? And I'd definitely love to get your thoughts on the strategy.
Yeah, I follow the screener a little bit. I'd be really interested in your thoughts on or experiences on actually practically applying the strategy, because I know it's one thing to like read a book and say, these are the cheapest and most high quality or best combination of those two factors, and you should just buy a basket of these. But how have you been sort of working through that practically? Like, how often are you rebalancing or buying and selling? Have you had any like tax considerations in terms of what type of account you'd run that sort of strategy in, or any learnings like that?
Yeah. So I have, I'm probably doing what would be considered a modified approach, though in my mind, it feels more like the pure approach to the Magic Formula strategy. And to explain that, in the book, Greenblatt advocates for buying over the course of a year, a couple stocks every month or so from the Magic Formula screener, not selling them for a little while, but over the course of the year, you build up about 20 to 30 holdings from the list. And that's companies with over $50 million in market cap with that rank high on the screener. So you'd build your portfolio over a year, and then at the end of a year, and then from there, you would keep cycling out holdings after you've held them all for a year. And if they're still on the list, you hold them. If they're not, then you sell them. So the idea is to have a hold time of 1 year for each holding. And the reasoning behind that was capital gains taxes, in that once you hold something for a year, you have long-term capital gains taxes, which are lower than income taxes in most cases, at least for kind of higher earners or who you might consider the investment class. It's typically a much lower rate than your marginal income tax rate, at least in the US. So that was kind of the idea behind it. I modified that in my own approach since I'm doing mine within a tax advantage IRA. So here in the US, if you put something in a traditional IRA or really any IRA, you don't have to worry about short-term capital gains taxes or any capital gains taxes actually while you're making trades or whatever in it. So I thought I would rebalance the holdings every single month based on what the new list is. So if anything falls off the list, I get rid of it. If anything is added to the list, I add it. So I constantly maintain, I was doing 50 holdings, but now I'm doing 30 holdings, the top 30 from the screener, all within that IRA to get rid of that tax consideration. And there goes Frank again. And we'll see, I want to see how that does. And I'm trying to collect about a year's worth of data to see, would that have created a gross under or over performance based on the actual Magic Formula strategy. I don't know if I'll keep doing that, Right now, I'm down like 7% or a little bit less than that over the last 5 or 6 months now. So not a great start, but then again, it's only 6 months, and this is a longer term strategy. So I'll be curious to see what happens there. But that's what I'm doing with it. What are your thoughts on that? Because I think Toby Carlisle would say something like you should hold everything for the long term if you got it at a relatively cheap price, and then ride those outsized winners as long as possible. Whereas with my strategy, I might be cutting those winners short if I'm rebalancing too often.
Yeah, I think Toby or even Joel Greenblatt would probably say, particularly Toby, I think would say, let's just back test all those options and see what works, rather than kind of trying to make a bit of a guess at letting winners run and that sort of thing. And I've read the little book that beats the market as well, and which is the Magic Formula book. I'm not sure if we mentioned that already or not, but it seemed like the primary motivation for holding for a year was purely tax. So I'm guessing a bit, but I don't know. I'd be interested to get like a Joel Greenblatt opinion on whether he would rebalance more frequently.
Yeah, I would, because my thinking was, because that was the reason. If you remove that reason, then there's no reason to not rebalance. That was my thinking, but perhaps it's an accident that maybe there would be big outperformance just by holding, because you ride your one outsized winner that carries the whole portfolio or something like that. And that's all that. I think what I'm really getting at is the Magic Formula just carried by a couple holdings every year, or is it really carried by like the whole portfolio or most of the holdings in the portfolio? I have a feeling it's probably the former, that it's just a couple holdings that actually carry it. And that's probably the case with many value investing strategies. That is value investing after all. You're probably going to have underperformance for a while, but all you need is the one or two outsized performances that do really well. And then that makes a career. So that's my thinking.